and welcome to the Breakfast Club. I trust you all had a wonderful weekend. It is February the 23rd, 2026, and we begin the new week. I hope you had a great weekend. I hope everybody had an awesome weekend with their family, some friends, some fellowship. I hope you had a great weekend, you guys. So it was nice to kind of chill with my wife the weekend. Get all the wedding plans mostly ready to go now. So the venue's all done. The food is done. Just going to get rings now. That's one of the expensive parts, but that's okay. Where are we at? Hope you guys are well. Welcome everybody. Let's have a little, make sure we are live here. And we are. So I'm looking at these relative equal highs above us here still. I've got this consolidation so far holding for CAM model entry on the 15-minute. I'm just waiting to get through this 5-minute bull trap would be kind of nice, and then we can finally send it up higher. We've been stalling in here, so I'm just waiting for this. I started getting in off of this one's here. It's mean threshold. And then when it ran up, I put my stop loss right at the mean threshold, so I don't want to come back. It promptly came back and took my stop there. So pay yourself at the high, comes back, takes you out. Yeah, you get a couple of bucks, so you just wait for the next setup to occur. That's it. That's it. Dine and dash this morning. So I had an overall bias for a long this week. And as usual, the market's doing what they will. We've had a run down into, let me have a look at the daily here. Yeah, we had a little pop. It depends on where today ends, because we had a pop up above the SIBI on the daily, and now we drove all the way back through it again, right to the edge of a volume imbalance. It's right back to the old consequent encroachment, and we bounced right off that consequent encroachment, and that's the line in the sand. Like for the bear or the bulls, the line in the sand is that consequent encroachment, or that little imbalance that's sitting down there at 784. Maybe I should just point it out to you so you can see. See this little imbalance down here? Let me get rid of that. So this is the little imbalance I'm looking at. So what happens is we came down just short of that. So that's the line in the sand. But if you take this right here, ignore my writing up there. That's me talking to my bot. And I take this and I do this. Here's 50% consequent encroachment of that last down close wick. Is that the right one? Nope, it's not that one. Sorry, not that one. Where's this guy here? That's 840. 840, right where we came down to. So that's the line in the sand, or you could take this as the line in the sand because it's the lowest swing. That would be the bottom of the bulls as well. That's your, you don't want to go any further down than that. That's like the absolute worst case scenario for a big draw on the bulls and then send it higher. We're still inside this range. We've got this little daily SIBI. We broke above it right here. This is why I was bullish. As long as I didn't mind it coming back into here and then sending it higher. But that big, ugly overnight stuff, back to this little imbalance down here, we're just shy of that. So, but if we come down, if we end the day above here still, then this would be one of those really ugly wicks that you see. And then I want to see the continuation back up through these equal highs above us and then start digging into some premium arrays inside the larger range here. So this next big breaker is really in play for me. So I want to see us come back and tag that at least at 0.94, 128, and then that will bring us right back to the relative equal highs. And if we can take those, then I'm happier with us digging into this mean threshold. But we got to get through here, and we got to get through the bull trap for me to really consider this going higher. So I don't want to overshoot too many PD arrays when we're looking for higher prices. But that was my whole thought about where price was going based on a daily chart. And you get down to a 4-hour chart. Let me get rid of all my chitty chatties here. Oh yeah, this was just my discussion on the weekend too. So 4-hour, we got above the bull trap, right? We cleared it. We came back, we tagged it, and I wanted to see it leave from here, right? We had this sweeping down on Friday, and then we ran back above this high and retested it. I thought that'd be perfect. Now I'd love to see that just leave. So that had nice intentions of leaving, but we literally gapped down. I wanted to see us gap up higher, come back, just tag it one more time and send it higher for our A+ entry. So this was a graded response. So as we start to lose the graded response, I started to go, oh, well, I guess we are going bearish. As soon as I lose that, we close that in, it fails for me. So it failed miserably overnight. And then we want to see this return and send it higher, right? So I want to see that continue pushing. I want to see that continue pushing higher now, and I want to see us get back through this bull side at 0.13 on a 4-hour. Get back on top of that, use it as support, and start pushing for higher prices. Reach for these relative equal highs at the 4-hour. And then, so far we have not, everybody's calling for bearishness. I know the majority of my community there is calling for bearishness. I still want bull. I still want the bulls. Despite all the downward pressure we had last night, we pulled back into a larger range here, but we have not broke the mean threshold of that. So if I take this, let me get rid of this here. And let's look at this. We're in that first 25%, right? Never hit 75. So the first 25%, the bodies are respecting right at 70 or 25% of that wick. And now we had a nice pull off of that. Now I want to see that just keep driving higher now today. And then send it higher for the rest of the week. Or at least for Tuesday, Wednesday. Then we'll decide from there. Does that make sense? Anyway. Hourly. So we come all the way down. We broke through this. I didn't want to see us break through this as well on the hourly. But there's a little imbalance down here. Let me stretch it out. You'll have a seek right there. You see those? We came all the way down. We poked multiple times trying to get through that area. And this last down close candle, its mean threshold is that line in the sand. And then you want to see that kick off of there. So your desperation in terms of the new opening, the whole Friday candle, you want to see this hold in here somewhere, right? Your line in your sand is the 50% of this, or this mean threshold, 50% of the body. So it actually held way down here. Not where I was looking for it to hold. Remember, we're looking for those 4 hours, and the 1 hour would be right there. But Look at all these wicks, how much damage they did. So I want to see, so we're inside this range. So I've got nothing in here to hold other than that little bull trap. And we're popped up above it and we dug down. Now you want to see it really start to get some legs here, the next leg higher. Because all I've got left is the mean threshold, which is what we're bouncing off of here. So we're between that, this, and that, those three key areas right there. So it's got to get some legs for me to get out of here and think higher prices. But overall, I'm still bullish. I'm going to stay bullish until that low is taken. If it comes back through here one more time, starts tagging that, I'll lose my whole love for this going any higher. But I'm still bullish. And that's my explanation for that. So let's put this on the 1 minute and keep an eye on it, see where she goes. So it'll switch to bearishness for me once we break this consolidation here on the downside and come back into it. Then I'd look for a run through this consolidation, obviously, but it has to literally go up, break through here, take this out, come back to that. Either it's low, it's close, or it's mean threshold. I wouldn't want to see it come all the way back through it, but just tag it if it's really aggressive and wants to go lower. It has to break here for me, otherwise still bullish. Here's the upside on a 15-minute chart is 969. Got to break that, get on top of this little bull trap here, get some leverage and start really pushing through and targeting that next upside. New week opening gap. Morning, Hadi. Keep forgetting to put your 830 in here. There we go. There's the retest. We're going shorter. Let's see if we close below here now. If we close below here, we're coming back into that range some more. You're right in the bear trap there now, Dave. So you want the bear trap to hold if you want to go higher. Morning, Hans. No body broke below here yet. How's that first squeeze on you there, Dave? This mean threshold, that first little bull trap you see after running these lows out, we've traded up to it. We came back inside it. Now we're right into the mean threshold of it. You want to see that hold now? Start closing through here. Start running higher. All this chop is not fun to be in, obviously, so expect this to go higher for at least another couple more minutes. Let's have a look at ES. Let's see where we're sitting for ES on the hourly. See how we rolled through this right here? That for me is no-go zone. That whole section will be a no-go zone now. And we literally went, traded through it here, came back, tagged it. Now you want to say, oh, now I want to see it go lower. I want to see it go, as soon as it breaks there on the wrong side, I'm on the wrong side. It's not going lower. Tagged it, went higher. We've come all the way back inside the next one. We've ran through that. You've come back and tagged that. And now you're starting to run through it. So now I want to see this and that, take the high, clear out this, and then look for this candle here to provide support to keep going higher. So we've got a no-go zone that was violated here, and you wanted to see, or created here, and then you wanted to see it stay. And the moment it goes above that, you go, I'm on the wrong side of it. It came back, gave you an opportunity to get back in long again. So if you were going short there off of that rule, you're looking for a Model 3 extension and it failed right there. Here's the backup. You come back in, so you got to get back in sync with it. This is where the horse suddenly spins around and throws you off. You get back on the horse, get back in sync with the market, and you would have cleared out whatever loss you took wanting to go short here. The distance between there and getting your trade off and getting back in sync with the market was enough to right now break you even. So if you said, I just want to break even, get my money back and sit in the sidelines and wait for us to get out of this range here now, just wait. That's how that fail safe and no-go zone kind of gets you back in sync with the saving your butt. That's it, 55 on the turn, 58 now. Look for a return down into here. Got one, D1, D2. Premium held. Still going lower. If we break through here now and take out this low, then we're looking for that break and this guy right here. So this whole section has to go for me to change over to a bearishness. Otherwise, we're just inside this little run here. Watch a retest here if you want to go lower. It's right off your 830 again, Hadi. I'm off your 830, Hadi. It's got to get above here, though. There's a small little point 43 above us there. Get up there. Oh, man. Okay, let's have a look at some other stuff here. You guys keep your eye on that. Let's have a look over here. We got a Mark 14 here now. There's still some, it's still a little buggy, but it's getting the majority of the trades. I'm going to put that on and see if we can get nearest. It's doing it here. That's the 14 version. Actually takes this, extends it out. So that would have been this is a win right here. And then the continuation here. And wherever the next one is above us should be it should drag it across here, so you got a target you can see. I think the 14 version does that. You got to get above here, start getting on top of this high here, and using this candle as support to go higher. Stop loss would have to be sitting right down below the midpoint, that little run there. Let me turn my engine off here. There's your entrance. $61%. But if you would have got in entered there, 50%, half your trade's off, 60% is out of there, and you would have been out there. So you would have been done on all the internal range liquidity that you want to get. That's low-hanging fruit right there. You'd be on the sidelines waiting for a new consolidation breakout, retest, cam model for a finish, or a reversal, take out the breaker, use the breaker to retest the SIBI below you. That's what I'd be looking for two different directions there for Bitcoin. Nothing here. Maybe you would have got triggered here. Depends on where your entry was. If that's a nice clean entry right off that high there. It looks like it's right there. So that'll be your entrance short. But you've got a reversal going on here. Bull trap. You'd want to see the bull trap hold. So I'd wait for the no-go zone to form first, which is right. Well, as soon as it came back through here, that's the no-go zone. Then all of a sudden it ran through it. You'd have to wait for the section to break on the downside. So as soon as that candle closes on the downside, it does come back, reuse it. Now you want to see it roll over and go lower. Stop loss will be sitting above the bull trap here, because if it clears that out, takes this no-go zone, you want to see this and this provide support to keep pushing for this premium level. So I want to see that roll over here now. You've got your range extension. Now you want to see a continuation inside here. You want to see a continuation all the way through and targeting down here. Is that a little imbalance down there? Yes, it does. All right. That's a big suspension block there. Your no-go zone's right there. It's not a busy, but anyway, it's the 5 minutes. So if we get on top of that, take this out, then look for this as a no-go zone. You're not going shorter, you're going higher. So it'll look for it to take this and find support at the top here. This is your CAM Model 3 leg. You know, all you got was extension out of that. Fails, support, then start running back into that range for gold. Silver looks like it's on a little turn here. As soon as we can get back through the bull trap, I like this. If we close here now in the next 2 minutes, back inside this range, that's your no-go line right there. It could be just there. Bottom of that candle that's forming right now. That's the little tag spot. Now I want to see us get above here. Stop loss will stay down here. Use this as support. If it's got some momentum, this has to hold price. Get a body above that, and then start driving for your premium levels. 1, 2, 3. There's 4 of them up here. And then look for the last up close candle. If we can close above $86.85 on a close, look for the highs, and then use this candle as support. Wait for a nice displacement candle here and a graded response and send it from there. Government bonds, we've traded back up, filled this, hit the bottom of the weekly, and now we're pulling away. So you want to see this drop through here, come back, tag this one more time, and send it lower. So the bond market, you expect a drop in the bond market now, targeting a rejection block at 40.43, and then the low, or half the wick, then the low. We're looking at micro percentiles. Those would be where I'd be looking for if I was trading the bond market, which I'm not. That's me talking to my my bot. We take out the mean threshold. We target the SIBI below it. That's the SIBI below it. Now you want to see it back, drive back through here, and then now you can use this one more time behind all this lot. You can find it, come down and tag this area here. So take that block, move it out, and you want to see, I'll kind of leave it here so we can see it again in the future. This is what I'm looking at. So once we get above that, you want to see this whole thing come back and be used as support to start targeting the next bull trap above you. There's a small little no-go zone. Right there. American dollar's got a turn. We came back inside it, sent it lower, took out the low, pay yourself at rejection block and old low. You'd be targeting down here. We've come back up into it one more time. So if this sweeps lower, I want to expect to see this start to move higher, this move higher, this move higher. So I want to see that breaker here, hold price. This whole SIBI here does not fill in, and you want to see it go lower. So that quick little spike up there, last run up higher. If it starts to run through here and closes above 70 or 97.70, expect to use this as support to push higher into this range here. But I think that's already pulled out the premium portion of this, so I'd like to see that go lower, and then all these other foreign currencies to go higher. Good push, you guys. Holy smokes. Bank's doing a turn. That means C should be turning pretty good too. 4 hour. Look at that chop on the daily. It's good. At least it's stable in that area. 161-ish. Yeah. Oh, that's euro dollar. This is Citigroup. This is hourly. Let's put it on the daily here. See how that mean threshold? We kind of banged around on it for a while. We launched through it, took out the high, and quickly pulled back below the low here. But we did not take out the whole equal low. Well, I guess we did. We ended down here. So you'd want to see it come back inside this level, hit it, roll over, and go lower. But nope, we're right back inside the mean threshold area again, and it's holding price. So unless we get one more run up into this area, I'd see right there. And roll lower. It's got to take out 1144, 111.44. No, 110.88. And keep going lower. It swept these lows now. It's just pulled back into that range. So morning, Abs. How you doing, buddy? The DAX. I want to see this level here hold price now. Send that higher. Send it higher. If we break through the mean threshold of that on the downside, look for all this to get retested. It's got to go higher. The DAX. It's good. Send it up. Get through here. Let's get through this new week opening gap. Get up on top of that. Disney's still sitting there. Right now we're inside this range here and here. So I want to get it down here. This T1 energy, whoever gave me that, I think that was Lucas. So far, Coinbase is hitting my downside targets. Got lots more down there to reach for. And I think this was a great idea. I remember when Michael called this. Now you think about this, I'm going to share a moment with you of look how much money you would have made if you listened to Michael back when this came back out. In 2017, Michael said this company called Roku's coming out. It's going to make a killing. If it gets below 18 bucks, I'll buy it. It came back below 18 bucks. That's what he was looking for, around the $18 range. So it started off down here at 16, came back to that $18 range he wanted, and then see if you would have bought 1,000 shares at 18 grand or something like that. 480 some odd dollars. Talk about the man knew that stock like you wouldn't believe. He had a firm conviction that was going to do something, and now that technology to me has not really kept up. This Netflix and all those guys have really been taken over. So those little modules you see on the side of your TV, this was what Roku was about, and it's dropped like right back to its 38 bucks, so all the way up to 400 down here again. So you make imagine 1,000 shares. The original $18,000 trade thing got you up to $400,000. Even if you said, I'll take 400 grand and I'll leave the bus, I'll leave alone. And if you're an options trader and shorted that, ooh, if you would have seen that little trade, where's that premium right there? It came back up, trade through it. You say if it trades onto that, I'm going to go short, or you take option trades for a short. You would have to endure a bunch of this, or wait for a structure break, close below, come back inside the BISI, and send that. You would have had a nice option trade on that. Anyway, doesn't matter. Just letting you know that Michael really knew stuff about stocks. He had a feeling about Roku, and man, did that ever pay off. Anyway, let's see where we're at. We're in this range. This is really choppy market, man. We'll wait for the 9:30. Yeah, we're into this 15-minute. We ran up, hit it. Yeah, this is not worth chopping around in. If you got in it as 8:30 again, targeting here, at least move to break even plus the cost of the trade and pay yourself there. Six more minutes. Let's see where she goes. See if we can get through here now. Well, so did you guys have a good weekend this weekend? Anybody get up to anything good? You still holding your 8:30 hitty? I took your 8:30. You didn't take it. I trusted your 8:30, buddy. So we can get these equal highs and start targeting higher now. Let's get support off of Abs's 6 a.m. candle here. That's the premium on a 5 minute right here. Now I want to see if it pops through that. I took mine out there as well, Hidi, so I want to see if we can get back in on that now for a continuation and take out the rest of this. So what you should see is this 5 minute fill all the way to here and here. Yeah. You're right at a time where you can expect to see a reversal or a takeoff. So it will either come out real quickly, pop through here, 930, tag that and shoot forward. I'm still looking bullish, so let's see what 930 does here. Give it a little tap above. There you go. Come back, smack it, and then take off. Told you. Cleared out that high, cleared out these highs. Look at this little target up here. Get your London high hit. Good for you, Hans. Well done, well done. There's your regular trading hour gap. I'm going to see if we close above here, though. There's a tap. We're going to send it up again. I'm going to wait for something clean here. Gold. Cleared out the high here. Didn't come back, tap it. Look for this one here. Last one's right here. Up. Now look for an extension. You haven't given an opportunity to get in on any of these unless there's one on a 1 minute chart. Let's see if there's a 1 minute opportunity here. This is the only small little imbalance right here. And the body came right back and tagged it. Wait for the bull trap. Closes above it. Closes above it. That's the institutional order flow entry deal. That's the A. Fair value gap occurs above a high. Tell you this many, many times. Occurs above the high. Look for the graded response. There's your A level trade right there for a long in gold. You didn't get anything inside here until right there. If you were just patient enough to just wait for the fair value gap to form there, you just give me an A level entry. That's all I want. And you could scale in A, B, C, and hope that it doesn't come all the way back and fill you in. And your stop loss would be sitting down here through the mean threshold of this. And away you go. It's a nice little trade. Did tag it and keep going. We're going up. That was just a big Judas run on the weekend. Threw me off my game. But we got in on the way down a little bit near the end, and now we're getting my final push higher that I've been looking for. So we went right down to the very line in the sand, lowest point you could, and actually threw some wicks in there, but the body didn't break the lowest point, and now we've got this return. I have to admit, they did have me thinking we were going to go lower, but when I checked that hourly chart this morning, I was like, oh, that little fella right down in here, and you stretch him out, you'll see him sitting in there. See it? How many times we wick through that, but the body's way above it. They respected that area, and it kept going higher. So I thought, oh, we've broken the bull trap, or this created this no-go zone. Perfect. But it would be down here through, come back, test, and then go lower. That would be the no-go zone. This would be one of them. This would be the last one right here before the mean threshold gets taken. So you had two more PD arrays to work through. And if you're looking at wick perspective, you only had one. And now it's finally turned. So now I want to see this drive right through here now. Clear out this. Let's get back to business. You got your 50% of your regular trading hour gap already, Hans. That's good. So see if we can get a bounce off of here in this candle. I don't switch till bearish until we take this out right here. You send that back up again. This is the crazy Ivan, right? 30, 32. Crazy Ivan to 38. 36. Crazy Ivan look back, and now you want to see a continuation. Well, I want to see a continuation. Now, if you're looking at a 5-minute chart, what have we done? We've broken this high, and we've come all the way back inside that 5-minute BISI we talked about. Now I want to see it go higher from here. And your stop loss has to sit below this. I guess it'd be one tick below this low here. There's the perfect fill of it. Now you don't want to see it come back and revisit that. So for me, I'd move my stop right into here and wait now. So it'd be sitting right there. If it clears that high, move to break even plus the cost of the trade. Pay yourself at the rejection block. Crazy Ivan is over. Didn't see you. Continue on in the direction it wants to go. So pay yourself there. Break even. Zero stress trade. Move to the sidelines and stop stressing over this trade. Just let it go now. If it either comes back and takes you out, then it does. If it doesn't, then let her run. You've already paid yourself a little bit. You're zero stress right now. So if it comes back against you, we'll wait for another setup. Morning, Shepard. But to 38. That's the bottom of the Crazy Ivan turn. Well, it's the end of the time zone for 30.38. Next one's 40.42. So I want to see this. You can create a 40.42 in here and send it up. Or if we take that low out, then we're back into this small little range here. Back to the midnight open. Let's see if midnight open holds price. Maybe put 40.42 off of here. That would dig us really deep into here, though. Yeah, I wouldn't want to see that, revisit that. Just send it. Here's 40. Aren't you glad you paid yourself at the rejection block? You're being tagged out now, so you'd be out of that trade, but at least you got a little portion off of that rejection block. Let's see if 40.42 puts us in here. There's 40. Not what you want to see here if you want to be bullish. You see how that key area, you don't want to see it get broken. If it does, you're out of the trade. You've paid yourself. You're protecting yourself. And this is totally not what we were expecting, but that's why you move your stop loss into break even and pay yourself at rejection blocks. So zero stress. You were like, well, I bet you feel better now. Now we've got a retest to the low. We're way through that level now. So we've taken this out, the low out, retest, and we've got a continuation lower. So stay on the horse. We're going lower. Forget my idea of going higher. You have to abandon your idea if the market's clearly showing you a different direction. So all we got was a run up into a premium portion of this larger, oh sorry, you can't see that chart. On this larger range here, we're inside this range. We ran right up into a premium portion. That little imbalance area, hit it. And now we want to see it's got to close below 885 for me to, or sorry, 852 for me to go bearish overall. Otherwise, we're just inside this small little range right now, and this could be the run on liquidity, and then a reversal. Send it back up again. $882. Keep your eyes on 882 right there. If we close below that on the hourly, I'm switching my idea from long to short. I'm back in with you guys who said, hey man, it's going short. All right, I'm with you now. Actually, no, we got to get back to that 828 again, because that was the level we talked about earlier, right? I'm just looking at it again now. This is the 828 level down here. That little level we talked about over here. That's the one you got to close below and use that as support before you go lower. Otherwise, still bullish. Top of the Crazy Ivan. He saw you. That was the top of the Crazy Ivan. Send it lower. Retest. Going lower. Equal lows below you now. Lows have been taken. Now for a 5 minute, you just want to see a retest of this right here and go lower. And you're allowed to come all the way up to 19 or 916. But that retest right there, that's all you want. If you're bearish, keep coming lower. I'm going to wait till we see what happens down here at 828. Inside this midnight open range. Morning, Derek. The B Master D. It's off at Hades 830 again. Oh no, this was Hades 830 over here. That was today's. Right off that 6 a.m. It's a beautiful thing. Abs. It's a beautiful thing, buddy. I have to keep track now of what day it occurred on. This would be a great little Judas run. I take people offside and send it right back through. The discount box inside here, we're back inside that. We're above this bull trap. Not clean. I'd like to see that just come back and tag that and leave. Don't like the wick. But right now I want to see this bull trap hold price and see if we can get above this little high here on a close, tack it one more time and send it up. Send it up. Let's get through Hades 830 here. Nope. Just a retest of this here. Is this a bull trap? This is the no-go zone. Didn't see it. My bad. Did not see that right there. Right off of it. Got to get through here to go higher. Can I get through there? Well, is there a little imbalance down there? Son of a beeswax right here. It's the only one, the only little semi-sibby that's in here. We lose the mean threshold of this. Still didn't run down there. Not acting cleanly, that's for sure. So I'm still sitting off of here now. Take out the go, no go zone, use that as support, and let's push higher. You've lost a hive already? Or you only had 2 hives? Oh, there's something I was going to ask you, Derek. I may have a proposal for you for a honey order. We'll see what the logistics are and see how much it would cost. They'll probably put tariffs on it. But anyway, I'll DM you in the chat there. I might have a little business proposal for you. My wife's always calling me honey. So we were thinking about putting little jars of honey out on the tables for people at the reception. And she's just going to put on there from my honey and me. Thank you for coming to our event. Send it up. I'd like to see it come back and give this one little tag. Nor'easter overnight, maybe one, take out the small one, but fingers crossed. Oh, I really hope it doesn't happen. I hope your little hive continues, buddy, and flourishes. Come on back here. Above a high, we've got that A level. That's A plus. It's a leave from here. A's there. Give me all the way back to here. Leave a little portion. I want a C level trade now. I'll take a C. That'll be a nice little pass, or just come back to Hadiz 830 there. We'll go long there. And as usual, thank you, TradingView, for your bullshit response time to my trade entry. I really hope your little hive makes it, man. Oh, well, welcome to the party, pal. I'm just going to move that to break even just because you know what they like to do to me. We'll come back into here. It's all good right till here. I'll wait for one. If it comes back there, I'll try and get in one more right on the bottom of this. Congratulations there, Chris. Good work, buddy. Right there. Stop loss now has to go below here. This mean threshold of this candle here, or this mean threshold here. I don't want to see us revisiting this. So it's got to start leaving now. We get back above this level here. Right there. I don't want to see that go below there now. That's half that wick. That's it. Delicious. Now I'm going to move to break even, and I am letting it run now. No, I don't want to see this pullback. Just send it up already. CK, hey man, how are you? I'm good, thanks. How are you, CK? Nope. Oh, say goodbye to my girl. So now we wait. This is just not acting the way you want it to act, or not acting the way I want it to act. So you take your zero stress trade off and you just wait for another entry. Look at that, ran right into that premium. Hit it. And we're back inside. So we've got to break here and use this as support to push higher yet. Eight, 8, 7. This is going to be my my new no-go zone for today. That's my make or break my run higher. You're anticipating it down. There's lots of people want it to go down. I still want it to go higher, but it seems like I'm the only one that wants it to go higher. But until proven otherwise, I'm still looking for higher. I know most of you want this to go lower, but I still look for this to go higher. And you got to stick with your convictions, man. Stick with them until broken. And that, for me, my whole idea switches, and I'm on the bandwagon with you guys when that gets broken down here. And, you know, if you're really looking at it from a ultimate conviction, it has to break these lows here, but that's pretty much into what you guys are calling for lower prices anyway. So your line in the sand is this mean threshold here for the downward side of it on the hourly perspective. But for me, I don't want to see that no-go zone get broken on the downside on a close. But if you're looking at it from as we would trade a 1 minute chart, we'd be looking right there for that mean threshold. If that gets broken to the downside, I'd look for a rejection block low. Same kind of thing here. If I come down to here, there's your absolute line in the sand on an hourly chart is 800. And if you lose that and you come back to it, then we're looking for a range extension and a continuation. Otherwise, everything is bullish. We're still inside this range. We're still bullish. We've come down to the breaker. We've hit the breaker. We've hit the no-go zone, and or not the no-go, but the discount box. We've hit it. The bodies have respected it on the hourly, and we're starting to push back into the range. So we're still bullish, and this little pop-up here, there's nothing in here other than this premium, and we've already ran through it, and we've come back to it, and now we're tagging it. So here's where the bouncing around is about messing me up, is I want to see this level get broken through like it did here, find support of that, and then leave. It didn't. Once again, it kind of dropped all the way back down inside this smaller range here, back to a consolidation, cam model entry, go higher. It ripped up, and now we're back into it, the middle of shit. There's nothing solid in here on an hourly level, but I still want to see this go higher. So until that gets broken, I'm going to stick with my idea, and then you guys can watch me eat crow if we break that on an hourly level. I'm going to stick right here for my rule is right there, and then I'll say okay. But overall, hourly has to break here for you to go considering you're heading down here. It has to break that for me. And if it doesn't, then you're bullish. Oh, and they're all going, but look there, and it's going down. March 8:51. Mm-mm. Keep your eyes on the prize. 8:28. Now retest here. You want to go lower? Tag that, send it lower. We've had a body trade through here now. You want to see this come lower. Off here, halfway through this wick, to the body, all the way up to this little tiny no-go zone here. What we're looking for over here is what we're looking at right here. Now we've run through it. If this same thing happens over here, then I'm with you guys going lower. But until then, no, I'm still looking for this to go higher. There's the retest. Now if it closes above that, now you're going to back into this range again and back to crappy price action. And it's already ran through 6 arrays. 1, 2, 3, 4, 5, 6. Need threshold. Send it higher. And we're not really above this candle yet, but let's see if we can get through this candle now. If that one holds, then we want to see it send back through this mean threshold, tag, and send it lower. I'm just trying to stay on the horse here now. Watch price action, very key levels now. These two will battle. We'll see if this one gives way. And then we're back into the bull trap again. This would be the silver bullet. This one's holding. Watch the body here. The next second or two. Now we're below it, or above it, below it. Wait for the structure break now. Got a break here or here. Here comes 828. And then that last one, 798. Make sure to put a little line down there. 798. Overlapping Hadi and abs here. $24,810 says Lucas. What I'm looking for is a crow. This will be my... I don't have a crow on here, but that'll be my eating crow zone. If you close below here, I eat crow. He certainly is. I'm not going to resume bullish now until we get above here. Otherwise, I'm flat. And I don't want to marry my convictions. That's one thing I don't want. I don't want to show you guys like, oh, I'm stubbornly holding on to a bull trade. I'm bullish, but not a confident bullish. I'll put it to you that way. And we're right down into the fail points for me, so if they go, they should go quickly and send it down. So even inside this range and inside this range, we're just consolidating since Friday. Wednesday last week, we're just inside this little zone. So until you break through this, you got lots of equal lows below you though. Definitely a target. If we close below here, use this as support, then start targeting rejection block and then these equal lows here in ES. If we start using this zone here. Look at that, abs. Look at that perfect little data points, eh? Crazy. Amazing. Amazing. Yeah, the 8:30 on Friday. Yeah. Yep. 8:30 is a sensitive level. It's one of the many sensitive levels. Get up there. We're in the squabblers. So you get a 21 in here and send it back down to 27, 30, 32. Then we look for the crazy Ivan in 12 minutes or so. Be nice to see a 21 down here and send it up. See how 17, 18 goes against 17, 19 goes against 18. They like to squabble back and forth. There's your 16 low. That dot's supposed to be down here. But 16, 17, they battle for who wants to make a high or a low. Who wins? 18 goes against 17, 19 usually goes against 18, and then 2021 either sets our high, or if we keep pushing through, Then I want to see it just start really ripping here. But we got this sucker right here. I'd like to see 2021 occur here, and then 22 take out 21, and then keep pushing higher. Then you're looking for your 27, 30, 32. Send it up. Here's 21. Changing direction. Just tag that and send it. There you go. Get up there. Let's go. This is good. This is a good one. Let's get through this bull trap now. It's 21. Now I want to see if 22 takes this out. Tag. Nope. 21 set the high. I'm looking for 27. See if you see 27, 30, 32 off of here now. Right back into the mean threshold of this candle. Oh, didn't see that one right there. Get up there again. This is consolidation has caused me to kick back and watch, and I'm going to say goodbye for now. Have a great week. See you later. Take care, Derek. Have a great day, man. Go warm up them bees. I want to see this 5-minute get closed above, and then take out this bull trap, which is way up here. So you got to get over the 50% of that wick. Or else no go. Well, there's a nice little consolidated market for you. A lot of chop going on. Darren, can you check ONDS? ONDS. Is that in here? One of our levels? ONDS. This one right here. I would assume it's this one. I'm going to assume that one. And what time frame would you like me to look at that on? Daily, hourly? Anything in particular? So far, yes, daily, please. Roger. So the daily, we've got this. We have this little breaker, or I'll call the that's your daily bull trap. See how we haven't broken the high of it yet? I would say, and I like to make sure that it is blue, because blue is my thing for daily. That's the bull trap, and this is your discount box right here. And you unfortunately have to include this piece right here. So in order to avoid the giant blob of color, I have to put a darker border on it. I'll make it a little thicker. So there's the consequent encroachment of that downside. So you want to see that get hit, roll through here, and I want to see this mean threshold get taken to the upside, use the support, and then you want to see if we can break above here. If we can get a nice little displacement candle with a fair value gap above it, look for an institutional order flow entry drill or a retap of the high. So the next couple of days, sometime this week, you want to see this breakthrough here and use this as support to start going higher, and I'd start targeting. And again, this is a few arrays away, but that would be my we're going to call it a price of balance, and we'll say it is the lots of things have to happen between now and then, but this is a nice, that would have been a nice little scale in entry yesterday and today. And then you move your stop loss to break even and let that thing run right now. So $10, $10.50, you're up 5% already. No, not 5%. Yeah, 5% already. And you're looking for this little premium to get tagged now. So 1074 would be my exit, and I'd be waiting for another retest of this, and then that zone would be my entry to target the mean threshold, take a portion off there, stop loss will move to break even right off the bottom of that. Well, I guess it would have to be the bottom of this, and then target the rejection block, old high, get up on top of that. Again, that's how I'd layer my entry hunting. So I'd look for hourly levels that would support this candle here now. Come back, give it that little kiss right on the equal highs here. Even tomorrow, or the next, not tomorrow, the next hour, if we come back and tag these highs and leave a portion of this open, which is what you want to see, and then you want to start running for 1073. I'd say about 1070 to 1089, and then see if we can start pumping through this breaker here. It's not breaker, it's a mitigation block really, because it didn't take out that high. So wait for a retest. You don't want, and leave your stop loss below the low, because you want to see this stay open as a breakaway gap to run higher inside this range. Pull your fib tool from low to high and manage it from dollar. You're just grabbing pennies out of this thing, but at a $10 stock, you know, 10 cents is a 1%. That makes much sense to you. And then those are the two bull traps you want to see get broken to the upside and sent higher. So we'll keep an eye on that. I'll have another little peek at that by the end of the day. Well, you're into options too, hey? Be careful, man. Since it's gonna be, unless you're just doing calls and puts, keep it simple. Do you guys hear it flapping? Do you hear the flapping of the crows? I hear them. They're moving in on me. This is where I play chicken with the train. Caw, caw, caw. What's a D saying boom for? Oh yeah, just calls and puts. I have already seen enough damage the other ways. Yeah. Doing spreads and stuff, man, that can be crazy. MOP. Remind me what MOP stands for again. Monday's opening price. Is that what you're trying to say? What's MOP? Still not above that. We got some work to do if you want to go higher. It's like a video game. Can you skewer the bird? What does your MOP stand for? A D. Is that Monday's open price or something? Midnight open price? Thanks. Russell, it's crazy busy. It's crazy choppy right now. Just trust your price action, because if you're trying to chase price right here, trying to make something out of this, you're just going to keep getting eaten up, man. Unless you're on a higher time frame and you've committed to going short on this, which a lot of you have. And as long as you're on a higher time frame, even this, look at this on a 15-minute. Look at how much wick is going back and forth, chopping this up. And even the hourly, look at the hourly and the damage this wick did. Right? That's just chopping around inside here. So unless your stop loss is sitting way up here, the last hour really nailed you. Like a 9 o'clock really came back against you, right? So all of you who are short on this, man, you must have been sitting way up here if you're still in that trade. So kudos to you if you're still in it. This may be one of them 11 o'clock turns. Come down, skewer my little chicken here, my little crow, poke him in the head, and give an 11 o'clock turn. Just clear out this liquidity. And that'll put me right on the bird. Yeah, don't beat yourself up in this, Russell. It is a choppy market, man. Yeah. This is nothing to get upset about if you're not in the trade. If you're just sitting waiting for something clean to set up. If you guys find something in here and it's clean for you and you're happy with it, take it. That is not a clean price action. You want to see it retest here or here. Leave this little portion open. Send it lower. no-go zone. We've traded through it. That validates this as the SIBI. The SIBI gets traded through here. That validates it as a no-go zone now. Trade all the way back up inside 75% of it. And model 3, model 4. And now you want to see that continue. So far, looking for the chicken. Watch the little chicken get stabbed right in the head here. This is Chicken Little. The sky is falling. It's going to skewer me in the head. $7.85. 7.85 is the next down candle. For your 3 a.m. candle, that is. Macro time. I'll send that higher. Send it up. No, our little chicken wants to get skewered here. Pinned to the ground. It's through 3 arrays in 1. Our ass is next. There, I'll send it lower. It's going pretty good. CK, thanks for asking. All's good. How's things on your end? Skewer the chicken. The little chickens get skewered. Oh no. Rejection block. We're through our level. I'm eating crow, you guys. I'm eating crow. I tip my hat to the higher authorities. Let's get a rejection block here. Oh no. Let's see if we can't be bang off at 798 and send it lower now. Follow the bird. Good for you guys, picking a good direction. Smooth over here. Oh, that's a good way to call it. It's smooth. Good to hear, man. Way to go. That's a nice touch. Keep coming. Follow the bird. All right, I'm with you guys now. Hourly. It still needs to break that whole hourly wick for an hourly chart to go lower. Otherwise, just the smaller one is, I'm okay with that too. 5-minute chart. Institutional order flow entry drill for a continuation. I got short right off of the this one right here, a retest. Big bold candle now. Let's get down to this 727. We're in the middle of the next 3 a.m. candle, so the next one after that is sitting at 720, 728, somewhere around there. Right in here somewhere. I'll put the bird on there. 728. If we can't get a continuation all the way down here. I'm sure I'm right. My stop loss is sitting right here right now. I don't want to see us come back through that candle. And the 5-minute, create a small little fair value gap. You might see an institutional order flow entry drill off this mean threshold here. So 870, 887. Skip below here right now. Create a little padding in here. There you go. That's good. Watch this candle here. So we're at 11 o'clock now. That's good. I like that. Some more padding. 57. Skewer the chicken. So if you're in this one, then you can manage this with the bull trap or manage it with the next reversal that you see. You scale out or turn out there and then start looking for your long. There's the next Mark III. Let's hit there. Now the Mark III next one would be right at 66, 67. So that's the next bird you want to hit. It's a boomer. Next one is your next boomer is 675 Hadi. That's way cleaner price action now. I like that right off that mean threshold of that hourly candle, how it used it for support to go lower. I'm with you guys on lower now. But see, you have to see that level get broken for you to be committed to one direction or another. So I was only committed from the bull trap here, or this no-go zone. I got in here and was looking for this, and it quickly went through it. I thought, well, if we retap this and keep going lower, then I'd be in sync with you guys. It took me all that time to get in sync with you guys. You guys all saw something I didn't. $680 is or 677. The bird is the bottom. And there's the first Sibby. And there's the bull trap. So if you pull back into here, you only want to see a wick get to that spot. If we continue down to here, that'll put you 50%, will put you right back in that first Sibby. Is that a bull candle? 850 close. Yeah, that's a bull candle. That's the bottom. I'm still looking for that little 675 will be the mean threshold of that next 3 a.m. candle. Right across the bird's eyes. It's a bird eye view. Come on, get on down there, Hadid. Let's go. Boom! There you go. That's that. There's 50%. Boom, indeed. That's a nice little run. That's a nice little run. Let's keep sending it, man. Now we'll reach for the other side, which is 624 now. There's 6. That's beautiful. Give me a 624 now. Let's put the bird down here. So what do we got for downside then? Let me stretch this out here. Oh, let's go. Still a bearish candle. That's the first bullish one here. There's a little tiny SIBI right there. Or a little imbalance right there. See it? There's the tag. Send it up higher. I'm going to try that. Send that up higher. Keep this below that low. We may get another push down lower, but I want to see this hold now. So far we're banging off this bull trap. No, that's already wicked too far through that. 16 seconds. Nope. It's got another push down yet. Let's see if it comes back into that level. $6.95. Before it takes that low. If that low gets taken, then this candle becomes important. Stop loss will go just above here. And that'll be my last trade because it's like 11 o'clock. So you're expecting a turn to occur here. So I just want to see if this continues going lower into 12 o'clock or whether or not we break this high here again and then start going higher. If it takes that low, I'll move to break even. Good job, Chris. Gotta peel out of here now. Still in that on mine, just above here. My entry's just up here. I don't want to see that go lower now. And a super tight stop loss because it's 11 o'clock. So I want to see this just really get some legs here and push lower. Nope, I'm out. So now you wait. Wait for something clean to happen. Or wait till tomorrow. Walk away. Walk away. Wait for the next day. Wait for the next morning session. Let's get on top of here. Nice little displacement on top of here. And that'll be our 11 o'clock turn. And we leave this open for lunchtime raid before returning back into the range or pushing lower. This could be the lunchtime raid back up to 807. That's a go. Stop's going to go one tick below here. Take out the high. Go to break even. Just want to see it tag that right there and leave. Let's go. Looking for my first target here. I want to see that stay open. Institutional order flow entry. That'd be nice if it just stays there and keeps going up. Now, if that takes out that high, I'll move my stop to right there. I want to see that institutional order flow entry drill hold. Just got to break that high though. Otherwise, we'll give it the opportunity to fully fill this. And then if it goes beyond that, then price is not giving us the exact level we're looking for. So it'll take me out. So that's what I'm looking for here. For that to take that out, I'll move stop here because I don't want to see it revisit it. There's the full fill. Now my stop loss goes to the bottom because I don't want to see that. Because there's the change. That wick, now that's got to get above here, come back and use this as support. Otherwise, we're back inside this range again. And we're looking for a retest of this candle. First of all, a little pop up here. Give this a kiss. We'll see where it closes just now. And then you're looking for 50% of this range. That wick's the one that does the damage. I was looking for precision. Doesn't give it to me. I'm out. So now I'll wait for this to get broken to the upside because we're too high up in the premium portion of this small little range here. That's not really a swing point. That is. So that would be the bull trap you want to see get broken. But this is the next one I want to see if we get a ride through that. See, we're working this whole area again. Demand that precision, you guys. If you don't get it, then move to the sidelines and wait till you see something that, and you're constantly looking for ways to protect your thing. You don't want to see all this wick action here. So if you're looking at 50% of this small range here, a retest of this candle here. Now that we broke that, and on a 5-minute chart, we haven't even broken this reversal here yet. Let's kick it off here now. Send it up. Start pushing through this candle. There we go. Are you still in your long, Hadi? No, you're out of it. sure I have my stop loss super tight here. It just tagged me out. Let's see if it closes above here now. And that's the important one because that's the swing point. So this would be leverage here. Start moving through here and you're way up. So looking at 807, a retest of these lows here. Also puts us in that mean threshold on the hourly, which is what you want to see, right? You want to see a close below the midpoint of this, come back, retest it, which is also confluences. So I'd like to see that level get retested and then see if we can't see a reversal here for lunch hour. And then a continuation. So this would be like the 12 o'clock reversal for a run down and take these lows out. There, we're above that level now. You want to see that keep going higher. Get one tick below the low. I don't want to, now I'm going to use this as a support. One tick below that low, that'll put me in a break even plus the cost of the trade. Oh, great in the minds, Hadi. We're thinking alike, buddy. Let's go for 807. I'm reaching a little too far right now, I think, with my PD arrays because there's multiple ones to get through yet. But I'm pay this off right here. Hadi, it is 8:30. I'm going for the 8:30. Go for it, man. Retest right here. Pop. Send it up. That mean threshold, a little right there. That's it. So my stop loss will go right there now. I don't want to see that get retested. Curry fishball. Just want to ask why long when it breaks the high at 11.10 instead of waiting for a retrace to the fair value gap? Well, because that's the bull trap. We look at these as bull traps, Curry. You know, you might look at it as a breaker because it can be a breaker and it can be just a mitigation block. It could be a propulsion candle in the opposite direction. I call it a bull trap because it has to break it, come back, retest it, and send it up higher. I'm out as well. So we violated the mean threshold of that candle, so a retest of right here. I'd like to see that, and if we lose that on the downside, then we're coming back and retesting these guys again. And 11 o'clock, we're looking for that potential reversal anyway. curry. That's why it was really tight going down here, anticipating a potential for reverse. And then you're looking for a retest of that candle once you break that high. So it takes that high, and you want to see this stay open as a breakaway gap. So you use the whole thing, and you're one tick below that low. And then the moment the high is taken, move your stop loss to break even, because that's it. You just want to see it, tag it, and leave. So the moment it takes the high of the previous candle, that's just my rules. That's nobody else's rules. It's just mine. And that's why I did what I did. You got to have your rules, and you got to stick to your rules, man. Whatever they might be, you got to stick to them. So there's the 5 minute mark. We've traded above it. We've come back inside it. So we didn't get this one. This is the optimum one right now. I want to see that go higher from here. If it trades through it and tags it again, look for a retest in the lower. Otherwise, I want to see that go higher from here. Right to 757, which is this old high here, or this old bull trap here. Do you trade London as well? No, I will next month, because I'll be in London next month. March, April, I will be trading the British market. So I'll be up way before you guys are. Me and Ollie will be trading that. We'll be sitting in London, in a pub in London, trading the market while you guys are sleeping. Slight change in direction here. We're below it, above it. Wait. You gotta wait for a break on the high now, or wait for a break on the low, because that running above, below is just a small consolidation. It will beat you up, and you've got two little bull traps that you might find some support off of. And there's the top right there. That's the 57 we were looking for right there, the bottom. Now I want to see that hold. So if you did get in long there, your stop loss is right up tight to it, because you don't want to see it come back and retest that now. You want to see it go high. Now you might want to give it tons of room, but for me, I'd be like, nope, that's it. I don't want to see it go any lower than that. If it does, then it's not for me. I'm out of the trade. Because you demand that kind of price action, right? So if that starts to leave from here, I want to see half this wick now. And then go higher. So if your stop loss is sitting there, just go one tick above, so you paid for your trade. Because that half, that wick right there, don't want to see it get taken. Right there, I'm out. Don't want to see that. So now you're looking for another deeper run down into 50% of this. Just watch. That's why you got to watch those levels, because they are important. Watch her run down into this 50 here now. And that puts us right near this mean threshold that we want to see. That'll be just enough to pop through into the discount range, hit the 50% of this, and then see if there's another reversal. There's 50. There's the pop onto it. That's it. You want to see it go up from here. Isn't that beautiful? Isn't that a beautiful thing? So your stop loss would be right into break even now. That's done. It's got to go higher. So we saw the half and we went, nope, if we lose the half of that, then I'm coming back to 50% plus that. And it gave you the perfect tap. Now I want to see it go higher. And you're break even again. So now you don't want to see it come back and revisit this, because if it does, then it's eaten through this and we're coming back into this old high again. So watch this wick, half of this wick. 25%, that's nice. Just keep going now. clear the high. Now use the top portions of this candle to keep going higher and look for this mean threshold above you at 773. This is the range I'm in. So I want to see 773 or at least get above 767 because that's the next upside candle. So watch here. If you lose that 50%, expect it to come lower. London or Darren, do you look at 11 a.m. candle? The whole hour, 11 a.m. full 11 a.m. candle, hourly candle, or just the straight 11 o'clock candle. Now, I always look for 11 o'clock for a fair value gap to form around 11 o'clock, and I trade that fair value gap or the bull trap. That's typically the safest way to trade that 11 o'clock. Just keep the same theories that we use all the time, Hadi. Don't try to reinvent stuff. Just stick to, if you see a 11 o'clock, so I'm looking for a reversal here, right? You get a little punch up, you have a little breaker, you run above it, there's a break in structure, come back to the structure, now you can catch your long like we did there, right? And then you catch it, and don't forget, this could be another continuation lower. This is just that small run back up that we're expecting at 11 o'clock. So the moment you see a break through our levels, and we got out because there was a specific level we didn't want to see get broken. And once it does, we're out of the trade and wait for something cleaner. So either wait for the macro to begin and get back in sync with coming lower. So we'd have to break market structure down here for me to get back in sync to go lower, or that 807 is still my upside target in the short term. So this hour may end right here, and 12 o'clock just run up and give us an institutional order flow entry drill right off these lows here. So this small little body ends here on the hour. So we got another 20 minutes of it banging around inside here, or it's going to run straight to that, hit it, another little open on 12 o'clock, just pop up above it and then send it lower. That's what I'm looking for here for an hour to get back in sync with you guys all going lower. And you see this is in that mean threshold. See how it held? It's still holding. We went higher into the rejection block, and now we're slammed back down. You don't want to see that candle coming all the way back down. You want to see that just continue pushing higher. So why did we come all the way back down and through that premium, the new premium array, right? And now we're tagging it again on the other side to roll over and go lower. So as soon as that mean threshold gives way, look for us lower. This is an important candle when you're studying it and you're watching it and you're going, there's no reason for it to come back into here except maybe to touch this and go higher. Because we've had a break above, a break below, a break above, a break below. No. Just a tap. That's all you wanted to see and go higher. And this candle, you wanted to see break that candle's high, and it didn't. So you're stuck in the rejection block again. We still haven't, that mean threshold's hit right there now. It's got to go. Got to go. So now my stop loss would sit right there. I'm not in this trade, but I would, if you're in that long off of there, that's where your stop loss is, and you just got tagged out. So you made coffee money, and now you're sitting on the sidelines waiting because that is not acting the way you want it to act. So you're getting into lunch hour now. That's what you expect. You're looking at the 11 a.m. candle as the important candle. So 11 a.m. Mark it out on your chart there, Hadi. Let's do that. Let's try this new Hadi way of looking at the 11 a.m. candle. This is the new 6 a.m. This is the new, you may have discovered something to keep an eye on there, Hadi. So we'll do that all this week. Remind me about that, okay? Because you may have got That 11 a.m. candle is an important candle. We did hit the mean threshold of that Mark III. See how it's chopping around? Not acting the way you want, man. I just want to see this one just stop right here. You see that? This is that hourly level we're looking at. I just want to see a small little candle and then an institutional order flow entry drill. Doesn't even have to touch that. Just give me a little pop up above that into this level right here without even touching it. That would be one of those frustrating things where we're all expecting to see it tag it, but it doesn't. It just kind of goes boop and then runs down. And you go, oh, I didn't get a chance to get in on that. But just watch it. So then from here, that's a 1 hour. You look for a market structure shift. So you'd have to see it break down below here, and then you catch it for a run. So this is your consolidation. That would be like a displacement for a cam model 3 leg starting to form. Breakthrough, you know, cam 1, 2, and 3 for continuation. So that's kind of like what I'm trying to anticipate here is the cam 3 leg moving up. And you got 15 minutes. Not like not like 8:30. Just remember, those of you who are new to this, we call the breakers these things like what I call bull traps. If it's a breaker, it's what Michael calls a breaker. So we're taking his philosophy. It's like the 6 o'clock candle we call the abs candle, but it's still Michael stuff. The 8:30 is still Michael stuff. All this stuff's Michael stuff. We just may have renamed it affectionately because people have brought it to our attention that that's what they focus on most. And but don't forget who was the mentor of our mentors, as it is. This is all Michael stuff. We're just taking it and creating our own model out of it. It may not be Michael's model, like my box to box is not Michael's model, but it works based on Michael's principles. So just keep that in mind. This is ICT stuff that we have taken and been able to use it to our own advantage. We found our own setup in there. And just because it's not Michael's setup doesn't mean that it's not a valid setup. See you later, Hadi. Take care, buddy. Good run today. We're really chewing through that first Sibby there, hey? We know Hadi's just, he's not really gone. You could say he's with us in spirit because he's always looking at his phone. He's always looking at the computer. He'll wander by and still have a look. And we'll see Hadi in the community chat. He will pop in again. He's always here. He's always lingering. That's like when I say, okay, I'm out of here, guys. I'll see you later. I'm constantly coming back in here looking. I got my alarm set for a macro time. So I set my alarm every hour. If I'm just sitting home here by myself, I'll set my macro time every hour. And I'll come back and I'll look for a setup that occurs every macro. And if it doesn't set me up, I wait. I just reset my alarm and come back in another hour and see if another macro forms. Especially after you get around lunch hour and it goes all sideways and crappy for you. Start looking at the 150 macro. Look at the bottom of the hour. Look at the Crazy Ivan at 130. I look at those two key areas, and then I look for the 1400 hour turn. So there's 3 key times I look for after lunch to see if I can get in on a nice little, and then especially if you got a nice bias somewhere, this would be a real nice little pop up here for the next macro time. Come back into this range. Don't break market structure to the downside. Push higher. Gives us our little 12 o'clock roll. And then send it lower. Oh, you're back already, Hadi. Good for you, buddy. How was your long weekend? Yeah, I think that's going to be it for me. It's already 10 to 12. So just kind of keep your eye on it. I'd like to see something like this. And I'll say this one more time so you guys get to see it. I've got, again, you have to do both directions. So I want to see this come down to here. And then I want to see it run back up to here, come back to here, take there, and then come down after lunch. Now remember, this can be all the way down to here. This has got the flexibility to move inside this candle, even wick below here, as long as the body, I'm talking about the body here, needs to stay above this spot right here. So that's where the body has to stay above. Otherwise, you see this. If we see this go from here down to here, then up to the body has to stay inside here. And then I have to see, we'd have to see that mean threshold get taken. So the body has to drop below here. And then there's really nothing in here except for there maybe, and then lower. And if you're going to go higher, I'd expect to see this. If we're going to go higher, I like to see this into here, come back to here, there, get on top of 830 and start moving higher. So there's 3 different scenarios for you. 1 for higher, 2 for lower. So anyway, that's it for me. Thanks for tuning in. Appreciate your guys' time. As usual, I'm sending the love. Take care of each other out there. Be kind to each other out there. I guess a couple of small trades out of this today, but I had to get some decent, I had to get my line in the sand. The relationship I was in for a long didn't work out. And there's that point where you know it just doesn't work out, which was right there. And we decided to part and go our own separate ways. So while she went long, I went short, and that's where it went. So that's my only big trade this morning, instead of you guys who caught it from way up there. And bless you for finding it, man. Good for you. It took me a while to get there, and the bird is gone. All right. So any questions? Anything else you want me to look at before I go? Abs, you are welcome, my friend, anytime. You are welcome. Anybody else? Questions? Any stocks you want me to look at? Let me know. I'll give you about 60 seconds to let me know in case there's a lag in the feed. No? Nothing? No one? Alrighty, I guess I'll see you guys tomorrow. Thanks for tuning in, and I'll see you later. I'll see you in the Telegram channel if I see anything good.